A sense of what's on the frontier with regard to gene editing. When I hear that, I kind of think of like immortality. Is that something that's possible with, the exception of, getting hit by a car or other things? I mean, will we be dying from diseases in the future thanks to gene editing?
9 top biotech stocks to buy now. The biotech sector offers an exciting opportunity for high-growth investors. Advances in science are creating new ways previously thought to be unimaginable to treat and prevent diseases with new drugs. The process is rigorous, costly, and time-consuming, with trials taking years before knowing whether a new drug under development will pay off. When it does, buckle in, baby, because that company's stock is going to the moon. Some consider these companies to be high risk, but they also have the highest reward once the new drug under development gets FDA approval. That's the euphoric moment most biotech investors wait for. Today, we're going to review 9 top biotech stocks to buy now. First though, let me say biotech stocks should make up no more than 10% of your portfolio when investing. Do you agree, or do you think it can make up more? Let me know in the comments below by typing agree or more. Now let's jump into these 9 top biotech stocks to buy now. It's been an unforgettable past few months for biotech stock performance. Health-focused technology firms have outperformed many markets. Some scientists believe that we're in the golden age of biotechnology. Scientific advances are creating new ways, previously only imaginable, to treat and prevent diseases. The biotech sector is also presenting exciting opportunities for investors. That said, these are the top 5 biotech stocks to buy now. Number 1. Pfizer. Pfizer struggled before the pandemic with an unattractive portfolio and dwindling top-line growth. However, it's been a 360-degree change after the successful release of its vaccine. With its antiviral drug Paxlovid, it could generate upwards of $100 billion within the next couple of years. Moreover, revenue growth on a year-over-year basis is at a staggering 114%. Approvals in several countries for booster shots in children are likely to significantly increase vaccine sales within the next 2 years. On top of that, the disease crippling the world today could be endemic, which bodes well for sales of Pfizer's vaccine and antiviral pill for years to come. Global sales in the third quarter of 2021 alone were superb, $13 billion. Hence, there's still an incredible growth runway ahead. Number 2. AbbVie. Pharma giant AbbVie has been an incredible performer, outperforming the broader market in the past 5 years. Over the past several years, financial results have been solid, spearheaded by its mega blockbuster rheumatoid arthritis drug Humira. Humira is the world's most successful drug in terms of sales. On top of that, it boasts a highly attractive dividend profile with almost an 18% 5-year dividend growth and a 4.3% yield. The company has been highly consistent in maintaining an upward trend in the top and bottom line results on the financial front. In the third quarter of 2021, the enterprise generated over $14.3 billion in sales, which came to 11.2% higher than the prior year period. Moreover, its immunology business, which includes sales of Humira, witnessed a healthy 15.3% increase to $6.8 billion from the same period in 2020. In 2021, AbbVie's earnings grew 38% to roughly $1.80 per share. Additionally, it generated a truckload of cash with a 282% increase from the prior year period in free cash flows to $21.7 billion. With all the sparkling stats, AbbVie stock is one of the most attractive biotech stocks out there today. Number 3. Novavax. Novavax is on the verge of commercializing its highly anticipated COVID-19 vaccine. Its vaccine was recently greenlit by the World Health Organization and should receive approval elsewhere. Moreover, it has several exciting products in its pipeline, which could result in monster revenues this year. The vaccine technology company has an impeccable safety record and is conducive for distribution in lower and medium-income countries. Additionally, its vaccines are also safer than other market offerings for children. Analysts' estimates suggest that its revenue could go from just $18.6 million in 2019 to $4.8 billion in 2022. The company has plans to produce over 2 billion COVID-19 doses in 2022. If it doesn't run into production troubles, it could comfortably achieve its target. resulting in hefty returns for its stockholders. Number 4. Biogen. Biogen is one of the world's leading biotechnology companies, focusing on developing innovative therapies for severe neurological and neurodegenerative diseases. The company's core growth focuses on multiple sclerosis, Alzheimer's and dementia, Parkinson's disease, spinal muscular atrophy, and amyotrophic lateral sclerosis. The company has a firm position in the multiple sclerosis market, with several products including Avonex, Plegridy, Tecfidera, and Tysabri. Its multiple sclerosis revenue was $8.7 billion in 2022, with almost 40% coming from Tecfidera and Vumerity. Its other, Tysabri, continues to bring in revenue for the company. Biogen is also looking to consolidate its position in the multiple sclerosis market by introducing new treatments. The firm is also trying to diversify its pipeline to be a leader in the neuroscience and therapeutic areas. From 2017 to 2020, the firm executed 20 business development transactions to boost its pipeline significantly, including a partnership with Sangamo Therapeutics in February 2020 to develop gene regulation therapies for neurological diseases. Plus, it's looking to strengthen its Alzheimer's and neurodegenerative disorders pipeline. For instance, its spinal muscular atrophy treatment Spinraza has consolidated its position in the neurological disease market. It was the first treatment to be approved in the U.S. for spinal muscular atrophy. All these developments strongly indicate that the company's stock will rise in value in the next couple of years. Number 5. Gilead Sciences. Gilead Sciences develops and markets therapies to treat life-threatening infectious diseases, with the core of its portfolio focused on HIV and hepatitis B and C. The acquisitions of Chorus Pharma, Myogen, CV Therapeutics, Aresto Biosciences, and Calistoga Pharmaceuticals have broadened the focus to include pulmonary and cardiovascular diseases and cancer. The company's flagship HIV therapy, Biktarvy, continues to deliver strong growth and market share gains. Along with Genvoya, these next-generation HIV products offer better long-term safety profiles than competing drugs. The Food and Drug Administration's full approval of Gilead's Veklury for treating patients with COVID-19 has also aided growth. Gilead is also looking to boost its portfolio and pipeline and expand beyond antivirals into other areas. For instance, the company previously acquired the oncology company Immunomedics. This added breast cancer treatments to its portfolio, which should help accelerate Gilead's oncology efforts and reduce its dependence on its virology business. Gilead should be considered a strong candidate for those willing and ready to spare some cash on the biotech stock. Number 6. Regeneron Pharmaceuticals. Regeneron Pharmaceuticals is a biopharma firm whose products address eye disease, cardiovascular disease, cancer, and inflammation. The company has several marketed products, including Eylea, approved for wet age-related muscular degeneration and other eye diseases, Praluent for LDL cholesterol lowering, and Dupixent for atopic dermatitis, asthma, and nasal polyposis. The firm is also developing monoclonal antibodies with Sanofi in immunology and cancer. Regeneron is developing bispecific antibodies and antibody cocktails with other collaborators and independently. However, its key growth driver is Eylea, which continues to generate substantial revenues from the continued label expansions. Eylea, which treats neovascular age-related macular degeneration, diabetic macular edema, and macular edema, is approved in the US, the European Union, Japan, and other countries. Demographic trends, including an aging population and an increase in the prevalence of diabetes, are driving growth in the US. The company is also working on expanding the drug's label into additional indications, which would naturally boost sales. The company is also benefiting from the approval of Dupixent injection to treat adults with moderate to severe atopic dermatitis and asthma. The pharmaceutical giants are definitely worth giving an investment eye. Number 7. Amgen. Amgen is a leader in biotechnology-based human therapeutics with historical expertise in renal disease and cancer-supportive care products. Flagship drugs include red blood cell boosters Epigen and Aranesp, immune system strengtheners Neupogen and Neulasta, and Enbrel and Otezla for inflammatory diseases. The company has a history of acquisitions to drive growth and boost its pipeline. For instance, in 2013, its purchase of Onyx strengthened its presence in the oncology market thanks to the addition of Kyprolis to its portfolio. The drug treats multiple myeloma and has very significant commercial potential. Plus, other drugs such as Blincyto, Nplate, Prolia, Exjava, and Vectibix are all performing well. Amgen has also seen label expansions and new drug approvals. For example, Aimovig was approved by the FDA in 2018 for the prevention of migraines, while Evenity was approved in 2019 to treat osteoporosis in postmenopausal women at increased risk for fracture. Both drugs are performing well. The company also has a deep pipeline and a strong biosimilars portfolio, which could help drive growth over the long term. Amgen's expansion into international markets such as China and Japan also bode well. Its growth and price performance have been consistent, and investors should not worry about the positive outcome if they decide to invest. Number 8. Incyte. Incyte focuses on the discovery and development of small molecule drugs. The firm's lead medicine, Jakafi, treats 2 types of rare blood cancer and graft-versus-host disease. The company's other marketed treatments include Olumiant for rheumatoid arthritis and oncology drugs Iclusig for leukemia, Permazire for bile duct cancer, Tabrecta for lung cancer, and Monjuvi for diffuse large B-cell lymphoma. Jakafi continues to be the big driver of growth, though. It became the first FDA-approved inhibitor for any indication and the first and only product approved for the treatment of myelofibrosis and polycythemia vera, 2 rare blood cancers. Its label has been updated several times since its first approval, which has boosted the company's sales. The drug has a long patent life that runs until late 2027. Incyte is working on expanding the drug's label further to help drive additional revenue. Incyte had a solid third quarter in 2021, where revenue came in at $813 million, up 31% year over year. Plus, adjusted earnings per share jumped to $1.18 from 23 cents the year prior. Those are enough indicators that the company's stock is worth your time and investment. Number 9. Amazon. When thinking about the top biotech stocks to buy, Amazon.com is likely the last name that comes to mind. After all, Amazon.com is an e-commerce giant. How does the tech giant count as a biotechnology company? Well, Amazon.com is far from a one-trick pony. Sure, the company is a dominant force in the e-commerce space, but it also has its fingers in many other sectors. One of those sectors is medicine. Jeff Bezos has long held an interest in the anti-aging market, often investing millions of dollars of his own money into the space. As the founder and former CEO of Amazon.com, he's also invested millions upon millions of Amazon.com's dollars into the space as well. In 2017, Bezos and Amazon.com made headlines when they invested millions of dollars into a company known as Unity Biotech. The company is working to develop blockbuster anti-aging products, solving one of the biggest problems in the biotech industry today: aging. However, the investment in Unity Biotech was just one of the many investments in the space that Amazon.com and Bezos have made. Most recently, Nautilus Biotechnology announced that Amazon.com's venture capital arm invested more than $70 million into the biotech startup. Nautilus has been operating under the radar for some time, but may be onto something. The company is currently studying the full lineup of human proteins. It's in the process of building hardware and software that will allow it to perform a detailed analysis on the body's proteins in an attempt to reshape the current medical approach to some of our most pressing ailments. Sure, Amazon.com's core focus is e-commerce and cloud computing. However, if you don't know much about the field of medicine and want to avoid high-risk plays but want to put some skin in the sector, this company is a great way to gain exposure while investing in a blue-chip tech stock that you likely already know plenty about. And that's it from us today. Which of the biotech stocks we've covered looks more promising to you? Let us know in the comments section below.